Good morning, good afternoon, and good evening from wherever you are watching the YouTube channel. It's another brand new week. So we are going to be talking about our trade of the week. Our trade of the week for this week is going to be Euro USD. Before we go to this trade, let's look at our previous trade of the week. AUD NZD, so we can have an update of what actually is going on that trade. Okay, let me take out this okay. So I will try and find that this market is in a very big range on the monthly, and we said we are looking at this opportunity of this dropping down here before going back up, or probably you may also see we move back to the top before it drop down. So these are the two scenarios we're looking at on the monthly. So quickly on the weekly, identify that this market is what is having some kind of showing us this pattern. I don't know if you can call it a triangle. Okay, you can see it's a triangle. Okay, it's forming a triangle on the weekly, so it can continue to form a triangle which could either break to this side, break to the upside, or just drop down. So these are the two scenarios that could occur. So these are what we identified on the weekly, and going down to the daily. Down to the daily. We identify this area and daily. So the market actually during the previous week shows us something like a fake out, or what they call a turtle soup. So this is more like a fake out, a turtle soup. Here we've identified that we are going to see a bounce in this area, like a break and a retest is what we expect. We actually see a break, but it ends up being what? A fake out. So that's what we saw last week, the previous week. So our plan was to take advantage of the break by going to our 4 hours. Yes, which we actually did. We are looking at this area of for resistance, which actually happened. So we took our trade here. Took our trade here. When the market break on the pullback, we entered. So for a while we were in profit until when the market turned back on us. Market actually turned back and take us out of the market. So going forward, what we are looking at is this. So the market has turned back and given us, but we are still expecting a break actually. So we'll be observing what happened in this area of resistance. So we're expecting that market could test this area and break down. That's one scenario. Another scenario could be that market could just break out. So it means there is a break of structure. So it means market could be heading back to the upper trend line that we identify on the weekly or on the monthly as the ranging market, or in the triangle, the top of other triangle. So this we'll be looking at going to next week. So that is that. Let's quickly go to EURUSD, our trade of the week, to see what it has in store for us. So EURUSD, going to EURUSD, looking at it from the monthly perspective. So like we always do every month, or rather every week, look at the market using a top-down analysis. If you look at this trade, you see the trend line. The trend is clear. That is downtrend. There's no doubt. So that's for monthly. Also on the monthly, we can easily identify using our FIPS from the previous high, which formed the lowest low. You can identify this. You can easily see that the market targeted 0.618 Fibonacci as a retracement point. So 0.618, you can see the market easily touched, then dropped. So going forward, we'll be looking for opportunity, selling opportunity. So let's go to weekly. On the weekly, we're able to identify a kind of chart pattern. Identify the chart pattern. Identify this continuation chart pattern. It's a kind of continuation chart pattern. So we are expecting a breakout of this something that looks like an upward trend line, so we're expecting a breakout. So not just a breakout, we're expecting a breakout and a retest, but seeing a breakout, the market doesn't look as if it's going to retest, but who are we to judge that? So the market does what it does, so it could just turn around and retest and continue the downtrend. So this is what we identify on the weekly. Then going down on the daily, you can easily spot it. You can easily use this as our target on the weekly. So market could just drop down to this, or even drop further. So depends on what the market wants to do going to the following weeks. So on daily, so the monthly and weekly direction is bearish. So you can easily spot the direction on the month, on the week, on the daily rather. Daily is clearly a downward trend. So also you can also identify using our fibs, looking at it using the most recent high and the recent low, and divide the market, reach this 50% Fibonacci before dropping down. You can identify 0.5 area as a turning point, so which also look like it's actually reached what they also call a resistance point. So these are the directions we've been able to identify for monthly, weekly, and daily, all showing us the same direction, downward trend. So although we are in a trade currently, which we took last week, prior to the US CPI news, which came out mixed, because the call came out as forecasted, although the other CPI news or data came out more higher than expected. So this was what we were looking at last week. So for entry, we are targeting this area. So immediately as market got to this area, we took our sell. So market now dropped down. Even the news supported it, so gave us more confidence. So before we talk about how we are going to take advantage of the following week, let's quickly look at other factors that we look before we go into before we take our trade. So we look at, apart from the economic data, we also look at the COT reports and the retail sentiment. Those are the four factors that we normally look at before we actually take any trade. We make sure all these factors are aligning. Like we can see, the technical shows or gave us direction. Monthly gave us a downward direction, which is a shorting direction that we should short, we should sell. Then the weekly also give us direction that we should sell. Daily also give us direction that we should sell. So for us to take an entry, we either go to 4 hours or we go to the 1 hour time frame for us to take our trade. Before we go to that, let's see what happened last week. What happened last week? Last week, you can see we took our Euro USD trade prior to the US CPI. You can see the core 0.3 came out as the forecasted 0.3%. You can see the month on month, or the headline, they normally call them the headline CPI, came out more higher than expected. You can see the CPI year on year, the headline also came out higher. So this is the driver of the Euro USD that also assisted our entry downward. So although analysts see this data as mixed data, because the core, which doesn't, what this means is the core CPI doesn't take into consideration food and energy. So because those are more volatile elements in computing the CPIs. So analysts believe more on the core than the headline CPI. So that's why they say it's a mix. Although the market is seeing this as an hawkish kind of data. Yes, because it shows that the Fed might possibly want to hike again in this year, maybe once again this year. So that is for the economic data. Let's quickly go and check what the CPI on Euro USD will give us. Yes, so let's quickly look at this. Okay, it's loading. So the COT reports, also known as commitment of traders, always comes out every Friday after the New York session. Every Friday. That is the last session of the trading week. Yes, which gives us the data of how the big institutions are buying and selling in the market, buying and selling the currencies, indices, and metals in the market. So gives us actually what is going on in the market. The big banks, the JP Morgans, the and the other big institutions. These are the data that shows us how they are how they are what how they are buying and selling different um, different stuffs like the indices, the metals, the uh, currency. So let's look at the euro first, then we go and look at the US index, which shows us. So you can see from the data, from the data from previous and the current data, you can see that euro is backtracking. You can see the contract, the net position that is of the buy and selling is dropping. You can see this from 172,000 to 75,000. That's a massive drop in the euro. It shows they are what they are moving to the short side. You know, the euro is moving to the short side. So you can also look at it using the trend line. You also design the trend line. You can see this trend line is moving downward. See, you see it's moving towards the negative territory. So you can also look at the bar chart. You can look at the bar chart. See the euro gives us 61.1%. The current longing position or the buying position is 1.1%, and the short is 30.9%. So let's compare this with the US dollar index, which measures the basket of US currency. So you can see this is giving us, you see, from 6,000 USD position is getting stronger up to the currently we have 19,400 net position. So USD is going up while euro is coming down. It means the institution are buying more of the USD than the euro. Now looking at the trend line, you can see how the USD is moving. So it's moving upward. It shows the strength of USD. Looking at the bar chart, you see the US index is giving us a long or buying position of 77.3%, while it has a short of 20.7%. It's far stronger than the euro. Yes, so that is it. So that's another factor we look at apart from the technicals. So let's look at the retail sentiment, which is the third factor. Looking at the retail sentiment. The retail sentiment, what retail sentiment means is it gives us the analysis or the data of the retailer like you and I, that are different from the big banks and institutions that normally just trade the little amount to trade on forex and all that. So this is showing us the position that we are taking on each market. Looking at the Euro USD is showing long. What this means is 64% of retail traders rather are alonging the Euro USD. So from history, we used to know that the retail sentiment is always different from the big banks and financial institutions. So they always take opposite position of what the big banks and the big institutions are doing. So we've identified from the COT report also that the big banks and financial institutions are selling the Euro USD. So which means we'll be taking the contrary view of the retail trader. So this is another conference factor that we are looking at in taking trades. So then we go to our checklist to mark out if the Euro USD meets all the 4 criteria that we normally use in trading. Euro USD. Okay, this is Euro USD. So why it is in red means because it means sell. So COT report wise sell. The retail sentiment is sell. Technical analysis sell. We are going to look at that shortly. Economic data also says sell. So why are we going to the coming week? How are we going to be taking advantage of this? So this is what we are going to be looking at. Now we look at this using our fibs to the current low. So these are the areas we'll be looking at. We're targeting the 0.382 Fibonacci. If the market can give us a retracement back to this area, so that's what we'll be looking at going into. You can see a pullback to this area, so take it down to is our first target. So this is what we'll be looking at. This is our TP1. This area will be our TP1. So we are still we believe with current unrest and the risk of sentiment, the price could still drop further, and could see a break, we test and a drop. So that is what we'll be looking at going into the coming week. Thank you for listening, and see you next week. Bye for now.